BloombergQuint. We're coming to you just moments after the finance minister's briefing after a 5-hour-long GST Council meet today. It was a very important meet because the center and the states were to discuss the rather contentious issue of compensation cess. Now, if you've been reading BloombergQuint, you would know that for a very long time now, there have been differing views on this issue of compensation cess. It arises from two very simple facts, that in the GST constitutional amendment, the center had committed to pay states any shortfall on account of the implementation of GST, and that payment of shortfall was in subsequent legislation arrived at a 14% increase every year based on a base year that they had taken into account. Now, in the last couple of years, the center has been paying this compensation cess to states, but sometimes on a delayed basis. This particular year, since the beginning of FY21, no compensation cess has been paid to states. That is for the months of April, May, June, July, and now in August, on account of the extraordinary COVID-19 impact on revenue collection from GST, as well as the other fiscal issues that are going on, including the delay in deadlines that the center provided to many taxpayers as relief on account of the pandemic. Now, here's what the finance minister told us in the press conference today. The estimated compensation cess owed to states in FY21, according to the center, is 3 lakh crore rupees. This is computed on the basis of the 14% formula. The estimated compensation cess collection for this year is estimated to be only 65,000 crores, and therefore we are likely to see a shortfall of 2.35 lakh crore in the compensation cess that is to be paid to states. Now, the Attorney General has advised the center that the only money that can be paid as compensation cess is money collected via the levy of compensation cess, and that no money from the Consolidated Fund of India can be paid to states to make up for this 2.35 lakh crore shortfall. So here are the two options that the center has presented to the states. In option number one, they've taken this 2.35 lakh crore shortfall and they've broken it into two buckets. They've said that there is a COVID bucket, that is a shortfall on account of the extraordinary circumstances due to COVID. Deducting that from the 2.35 lakh crore, the center arrives at a shortfall of about 97,000 crores, which they believe is owed to states. And they said that they can give the states an option to borrow this money from RBI via some sort of special window, details that have not been forthcoming as yet. The other option is for states to go to RBI to be able to borrow the full 2.35 lakh crore, which is the shortfall for this year. Later next year, they will review this situation all over again. States have asked for about 7 days to respond to both of these options. And what is now quite clear is the fact that the compensation cess levy period of 5 years from 2017 to 2022 will be extended by, I don't know how many years, but so that the money collected in the years after the 5th year can be used to make up for the shortfall in this year and in subsequent years. Now, this is my attempt to explain it simply, but I'm going to go across to our experts that we have with us today to tell you what the implications of all of this are. Please join me in welcoming M. Govinda Rao, a member of the 14th Finance Commission and a renowned economist. I have Mukesh Butani of BMR Legal with me and Pratik Jain of PwC. Gentlemen, to all three of you, a very warm welcome. Mr. Rao, if I can come to you first, for your broad comment on this adjustment in the GST architecture, the extension of the compensation cess levy period beyond 5 years, and these two options that the center has presented to the states.
In one way, I think this is an abrogation of the agreement with the states. Now, when irrespective of whatever has happened, the states were persuaded to join the GST regime by giving them an attractive package of 14% sort of increase over the base year figures of 2015-16. Every year, and then the compensation for 5 years, and that was an insurance that they got. Now, in that sense of in fact, when in an earlier meeting, the previous finance minister had even said, when he was asked what will happen if the if the compensation cess money is less, he said, if necessary, the government of India will borrow and give the money to the states. This is what he had said. But that regime has gone. And even before COVID-19 is a different issue. In the budget speech itself, the finance minister has said that I will limit the compensation to the compensation cess collections. That, in fact, the abrogation has come right there. So COVID is an additionality. The basic problem is the states do not have a bargaining power. They cannot go back. They have, in fact, you see, there is no way they can go back. Now, in this particular environment, it's a sort of a forced sort of an agreement. And there is no other way I can say that they are under tremendous stress. They do not have the money. Their own revenues are likely to fall by almost 3 lakh crores. And on top of it, the tax devolution is likely to fall by another 2 lakh crores. Now, in this particular environment, they are under tremendous stress. And they have to spend a lot more of money on the health, on saving the lives and livelihoods of the people because of COVID. So it's a sort of a forced thing, and then possibly they will have to take it. There is no other way because, I don't think this is something which is judiciable. And even if it is, now, I don't think this is the time that the states will go and then, they are not sure what the things will be. But, this is a loan. The other aspect of the loan, this particular loan is, the Reserve Bank, they have going to the Reserve Bank. And when you go to the Reserve Bank and borrow money, basically to keep the yield low. They keep the yield curve low because, you see, borrowing will be at a lower rate of interest for that reason, which basically implies that the Reserve Bank will have to inject a huge amount of liquidity, or it will have to really have that additional money supply to be done. In other way, either directly or indirectly, there will be monetization of this part of the deficit, and it will have its own implications on the economy as a whole. Now, let us not understand that there are free lunches in this system, and so it will have its own implications. But in any case, this is a solution, and the states have been given this the hard choices, and they will have to make within 7 days.
Mr. Rao, I want to come back to you to try and understand this RBI financing facility a little better, because the details we got from the finance ministry briefing were rather sketchy. But before that, I'll get quick comments from both Mr. Butani and Pratik. Mr. Butani, as you wrote in an opinion piece on BloombergQuint, this was between a rock and a hard place kind of situation.
Absolutely.
And as Mr. Rao has so eloquently put, what options do states have but to pick from one of these, two options that the center has presented, however disagreeable they may be, and even if the states believe this is an abrogation of the original GST agreement, because at this point in time, this is not judiciable. So what do you make of these two options that are confronting states?
Well, we need to still see the fine print, and that would put out options that are available before the states. But as Dr. Rao correctly pointed out, that the signs for the center coming out with via media, either convincing the states to defer the compensation or to work out on a new formula, were visible in the budget of 2020. Now, why was that the case? If you simply look at the GST collections for 1920 and the compensation cess, the center had to fork out 40% of the compensation paid to states through the consolidated funds of India.
But actually, Mr. Butani, I'm sorry to interrupt you there. That money was, made up for through the surplus compensation cess that they had collected in the first 2 years. And the finance ministry confirmed that again today, having confirmed that in previous conversations as well, that in the first 2 years of GST implementation, they had in fact collected more cess than they had to pay states. And that is the money that they used to make up for the shortfall in FY20.
Correct. So the center simply followed the philosophy, heads I win, tails you lose. So in the first 2 years, when I collected the excess cess, it went into my kitty. But in the third year, but you're absolutely correct. If the maths does add up, that the excess compensation collected in the first 2 years was made up in this. But I think when they entered the fiscal year 2021, this situation was staring at them, and it was widely accepted that the center will have to fork a higher amount. Now, let's try and put in perspective, without having seen the fine print of what the Attorney General has opined. He's saying that the compensation cess is predicated on as a loss of revenues on implementation of GST. That is how, now we don't know whether they have run some economic model to separate out whether this total loss of total amount payable under the compensation, what is attributable to COVID-induced stress and what is otherwise was a visible sign in the financial year 1920. But they are reading the fine print of the Constitution bill and saying that this is not compensation, this is not GST implementation related, and which is what the finance minister also highlighted. I also feel that the states here owe a sense of responsibility. So one option for the state is to go and raise funding based on the sovereign guarantees of the center, which is what they seem to be providing through the RBI route. But the other options is also for the states to consider ways and means to propel the growth. So let's look at two states. Maharashtra today announced a reduction in stamp duty because they feel real estate is very important. Uttar Pradesh has initiated a new investment policy just to be able to attract investment. Uttar Pradesh state released their figures also and said that they are getting higher dosages of investment even in the COVID period. So I think that here is a test for the states to see what is it that they can do to come in. I also feel that states have more leg room insofar as the constitutional mandate is concerned to be able to work out on new rates of taxes. One set of states believe that the center should add more items into the demerit list such that the compensation kitty itself goes up. I think that is clearly an unviable option in my view, because then what was the original design of the GST, which is only genuine demerit goods will go into the bracket of cess, would get even further defeated. So I think the options that are left before the state today is either borrow on the center's guarantee or look out for additional avenues of revenues within the state budget itself. I can't see any other way out, because at the end of the day, the more the center borrows through whatever mechanism, it is going to impact the credit rating of the nation as well.
Yes, unfortunately, Mr. Butani, the counter to that would be that any reform that states undertake, will take time for revenue to kick in. And as Dr. Rao pointed out, the shortfall is biting them right now, especially given the additional spends on healthcare, etc. But Pratik, if I can bring you in here with a comment on the broader GST architecture, right? We were thinking that this compensation cess, which is a hefty amount on a certain category of goods, will end in 5 years. Now it's becoming very clear that it's not going to end in 5 years, and it may go on for 7 or 8 or 9. Who knows how many years it will take to collect the revenue required to make up for whatever shortfall is experienced this year, and God knows maybe next year as well. So this view or this thought that eventually over 5-6 years we will converge to lower rates and fewer rates doesn't seem to be happening.
Yes, you're right. So look, in India, whenever you impose a cess of this nature for a short period, the history tells us that continues forever, right? I mean, in all likelihood, this 5 years had to go, to 7 or 8, etc. So one thing is very clear, that the period will now increase, right? Also, we have distorted the structure of GST by imposing certain other cesses, right? So Kerala introduced a cess last year to deal with the calamity, and so on and so forth, right? So cess is, which is supposed to be an exception, is becoming a norm, right? So it's clear that it's going to increase. The good thing is that they're not increasing the rate of tax at this point in time. And I agree with Mukesh, this is not a right time to increase the tax rates. Whether the ambit of cess will increase or not, I think Finance Minister kept that option open to say that tomorrow they might increase. However, there's one thing which I don't understand, and maybe Dr. Rao can throw some light on that. There are two options that they provided, like 97,000 crore under option 1. It's very clear that the way they have calculated is to say, this would have been my normal GST collection, assuming 10% growth is what Finance Minister said. This is what I'll end up to. And therefore, this is the compensation, 97,000 crore. That's clear. And that is going to come from the compensation fund. That's also clear. Even the interest will come from the compensation fund. So states won't have to pay a penny, even if they are borrowing this 97,000 crore. Now, when you come to 2,35,000 crore, what is not clear to me, and I think I heard Finance Secretary saying that even for 2,35,000 crores, if the states were to opt for it, it will be paid out of the compensation cess along with interest. Now, there was also a mention of Attorney General's opinion to say that center is liable to pay or liable to compensate the state only to the extent of loss arising out of GST compensation, which is 97,000 crore in our example. I mean, how you have computed that, that's a question, but 97,000 crore. That means that the balance, which is 2,35,000 minus 97,000 crore, the center is not obligated to pay to the states, as per the Attorney General's opinion. That's what I heard, right? So in that context, does it mean that the balance will be paid directly by the states to the banks? Okay, so 2,35,000 minus 97,000, 97,000 is coming from the compensation cess. The balance, which is 1,35,000 plus 1,38,000 crores, is it going to be paid directly by the states to the banks at a reduced rate? Because clearly that's not related to GST implementation related compensation. That's a compensation arising out of the pandemic, which is there. Right, and the Constitution only talks about GST compensation related to implementation of GST. Right. Yeah. So that's a confusion in my mind. Intuitively, I would say that states will go for 2,35,000 crores because obviously the finances are not in right order, and they will want to have more money with them, even if they have to pay interest at some point in time. That I think is a likely scenario. Of course, we have 1 week to go. But I have a little bit of lack of clarity on who will fund the balance between 2,35,000 and 97,000.
I get that. And I think that is the gray area here. In fact, there are two gray areas. One is, like you said, that will the compensation cess levy period be extended only to recoup the 97,000 crores, which has been computed as the loss on account of GST implementation for FY21, estimated loss that is. Will that be the only amount that will get recovered and paid to states, or will the full 2.35 lakh crore be sought to be recovered after 5 years and be paid to states? That's one gray area. And the second gray area, Dr. Rao, just to get your understanding of what went on, was what is this special window with the RBI? The finance minister said something roughly to the extent that we will help facilitate the state's conversation with the RBI so that they can seek loans at GSEC-linked rates and so that they don't have to go to the market to borrow. Is this debt monetization, or is there some other way that RBI would be able to fund states?
Before I directly answer this question, in fact, the states, quite a few states are taking very proactive steps in order to somehow manage the situation, as Mukesh mentioned. In fact, Punjab has appointed a committee under Montek, and I'm basically advising them on the fiscal side. Tamil Nadu has appointed a committee under Rangarajan, and I am advising Rangarajan on the fiscal side. I'm the chairman of the subgroup on state, sort of finances. There are a number of things, they have taken industrialists and then see how they can really fast track reforms in this area. I thought I'll just supplement what Mukesh said. There are a number of states, Karnataka has taken a number of steps, etc., etc. Now, coming to this issue, as Mukesh said, the things are still not very clear. We need to really look at what the fine print of the proposals are. But nevertheless, one of the things which the finance minister very clarified again and again, saying that in both the cases, the state governments do not have to pay. Whether it is 97,000 crores or 2.35 lakh crores, basically it implies that their expectation is that if it is the 97 lakh crore, within the next couple of years, they will be able to get the collections on ground and then they can meet the situation. But if it is 2.35 lakh crore, the cess will continue for a longer period until this is done. Both the interest and this has to be paid. I'll also tell one of the major problems that has happened with the GST. In fact, you see, until today, we were supposed to have a GST up and running, but until today, they have not stabilized the technology platform. Until the time they stabilize the technology platform, GST will continue to be a voluntary tax, which basically implies that you can't really, even when you come to the, one of the reasons why the GST revenues have not picked up, in the first 2 years they had more cess collections, and suddenly the cess collections didn't pick up even last year for the very important reason that the compliance of the tax has fallen because GST technology platform is not there. In fact, even now, you are not able to match the input, tax credit in a proper manner. This is all that gives rise to a whole lot of tax terrorism. In fact, the basically trying to pick and choose sort of a situation. I have written a paper, looking at all the details, and this is in the Columbia University website. I had to write it for Columbia University website. Apart from many other reasons why, this thing. So until the time you sort of finalize that, in fact, they had to call Nandan Nilekani and ask him when are you going to finalize? And I'm sure he has given some date. And once that is done, possibly, unless, all other reforms can happen only when you really, stabilize the revenue. And that was falling even before the COVID. So any calculation that you do about, so one would go to the counterfactual and say that what did you do with the technology platform? Whose responsibility is it? Now, but in any case, as I said, so my own reading of the situation is that in both cases, the states may not have to, this adds to their fiscal deficit. This adds to because this is borrowing after all, but then the center will allow them, but then they may not have to pay, so they will have to pay as and when
so Dr. Rao, is it your understanding based on today's briefing that
that's right.
97,000 crores will be recovered through an extended period of cess levy, and that will be given to the states. The rest of it, the states will have to either forego or borrow, depending on how it works.
In both cases, they are loans. 97,000 crore is a loan. 2.35 lakh is a crore a loan. 95,000 crore will be possibly, they will be able to make up, within a shorter period of time. If it is 2.35 lakh crore, it will take a longer period of time. This is what I thought, but then I need to see the fine print. We don't know.
Fair enough.
On the second question, when you're there, they see the state can directly go to the Reserve Bank of India. It is like that. States are not really going to the market. They are going to the Reserve Bank of India. Reserve Bank of India will actually take those, bonds. And then after taking those bonds, it may pass on to the banking system, or it may, basically it may pass on to the banking system. But at the same time, it's like short-term treasury bills, which used to happen with the government of India on the earlier occasion, where, basically the Reserve Bank will give fresh money supply, do the money supply and give, or, it will somehow try to keep the yield curve down so that the money is borrowed at a much lower rate of interest than the market rate of interest, which basically implies that the money supply is likely to go.
So how will this work? This is fresh money that the RBI will have to extend, or is there an existing window of some sort?
No, it's like a treasury bill. Either they will have to, it's basically say that it's a special bond of the state governments and they may do it.
Okay.
Or they may have to do a lot more of open market operations, etc., to keep the yield curve down. Because ultimately the rate of interest has to be lower than the market rate of interest. Even if they have to pass on. And how exactly they are going to do it, again, we need to look at the fine print. But under the circumstances, there is no other way but to monetize the part of the deficit.
Menaka, the thing, what Dr. Rao is saying was my understanding as well, from what I heard, that whether it is 97,000 crores or 235,000 crores, ultimately all of that will come from the compensation cess. Right? Now, if it is 235,000 crores, then clearly the cess period will be increased to God knows 5 years, 7 years, whatever. Right? I mean, it could be even more. Right. So that is one aspect. And second is, in that context, what happens to the Attorney General's opinion? Because apparently he did mention that what the center has to do is to compensate on account for the loss on account of GST implementation, which is only 97,000 crores. Now, this is the wording. Yeah. This is the wording, sir, also used in the Constitution amendment. So that means that if you have to actually do 235,000 crores out of compensation cess, and on one hand you have an opinion from Attorney General, then you have to amend the Constitution as well, right? So to take care of this situation.
See, that is in the Constitution. That's what they. But then when you come to the details that they talk about, they say that 2015-16 actuals of those taxes which have been pulled into GST and 14% increase every year. There is no proposal there. There is no listing there that in case of a any COVID or any other shortfall or anything of the sort. There is no such thing. So
but it says on account of GST implementation, which is the subject matter of dispute. Yeah.
That's right. Now the point is that you see, it's like a force majeure sort of a thing that you're talking about. But so that's again is a debatable. In the sense that, sort of this is an issue which has to be sort of adjudicated in any case. But, whether they do it or not, at this particular moment, states do not have a choice.
Okay. Pratik, I wanted to go back to that 97,000 crore point you made. Can you just repeat that for me? I didn't quite fully get it.
So what I heard was from Finance Minister when she was saying, she said that, look, there are two aspects of this compensation this year, right?
Right.
One is the compensation on account of GST implementation.
So I get the split of the 2.35 lakh crores.
So the way I understood was that the way 97,000 crore has been computed is that if COVID was not there.
Got it. I got that. Then that's option one, right?
That's option one of 97. That's option one of 97,000 crore. So if suppose 100 was the collection last year, she assumed 10% would have increased this year, which is 110. Okay.
Right.
And whatever whatever they were expected to collect if COVID was not there, suppose that was 90. Okay, in my mind, then the difference would have been 20, which represents this 97,000 crores. So they have tried to isolate the COVID impact, and the balance is on account of COVID is what I understood.
So from what I can get, states can either go with option one and borrow this cumulative amount of 97,000 crores from whatever the special window of RBI is, and this 97,000 crores that they borrow now this year will be made up by a extension of cess levy for a period of more than 5 years, and that money will then be repaid to the states, right? For them to be able to repay it to RBI.
No, as I understood it is actually the cess money will be directly credited to the Reserve Bank of India.
Okay, the cess money will be directly credited. Or states can choose not to borrow only 97,000 crores. They can choose to borrow the full 2.35 lakh crores, but all of it will not be compensated by an extension in the compensation cess levy. Only 97,000 crores of it.
No, that's what Dr. Rao is saying, and that was my confusion was. What he seemed to believe, and that's what I also heard on television, was that even the entire 235,000 crore will actually come out of the compensation fund only. So in that case, what will happen is, instead of 2 years extension of the cess, you might increase it for 5 years or 6 years.
10 years, we don't know.
But then what sense?
And that is precisely the reason why the states, finally, if they have been brought down on their knees, the states will opt for the second option, as Pratik's mentioned. I mean, it is much better to opt for a second option rather than go for the first option.
It's a no-brainer. It's a no-brainer. If I am any state, I will go for 2,35,000 because 2,35,000 also is coming entirely from compensation fund. So I don't have anything to lose.
Money. They want money in addition to the 2% additional space that is given. They want money now.
Okay, I'm going to try and bring in some commentary we're getting from some of the state finance ministers as well as the chief minister. So here's what the Punjab finance minister Manpreet Singh Badal had to say to BloombergQuint's Nikunj Johri. He said states didn't have any other choice but to consider the options laid out by the centre. The centre said it's not legal, their obligation to compensate states. So states have no choice but to consider the borrowing proposal. The borrowing by states would be financed by extending the levy of cess for the required number of years, which is how we've understood as well. And here's what he's also said. Dispute resolution mechanism under Article 279 of the Constitution should be activated so that the states can have a legal recourse if they don't agree on compensation matters. Let's go back to the
or
point
any other matter, or any matter.
On any matter, but the fact that the Punjab finance minister is raising Article 279 at a time like this seems to suggest that while the centre has given them two options, states might be considering a third one. What do you say, Mr. Butani?
Mr. Badal had raised this argument day before yesterday on invoking the dispute resolution. And it was not very clear day before whether in what context he's talking about, but it's now becoming more and more clearer. I have a slightly different view on the earlier point that was made. I think that the centre at no stage, even under option 1, is willing to bail the cat beyond the 97,000 crore.
That's where I was confused as well. I'm not sure either.
That also, Dr. Rao, seems to be the basis of the Attorney General's opinion, right or wrong. That could become a subject matter of dispute. States may be justified interpreting the Constitution Amendment along with the compensation cess law in exactly the same manner as you described. But it doesn't seem to me that that's how the law officer is interpreting it. Now, clearly, it's up to the centre because the law officer's view may or may not be binding. I also feel that that before getting onto the dispute resolution mechanism, the GST Council as a body under the Constitution, given the voting mechanism has been clearly laid down, is the authority. It's a different story altogether that you may disagree with the GST Council's body and still invoke Article 279 for a dispute. But I doubt it if this can go directly into the in a dispute situation, because you have to still go through the entire voting mechanism which has been laid down in the Constitution Amendment Bill before it goes to the court. So you could have a situation where the voting takes place for the second time in the 42nd GST Council meeting, because I can't see how the states will give up on their right. I also feel that option 2 would have evolved as a natural corollary of what happens to the balance beyond 97,000 crores under option 1. I'm speculating at this point in time because option 2 is far from clear as to how it will work. The third aspect, which is also important, which didn't come out very clearly in the press conference, is what happened to the entire debate on deferral. It's one thing to say that the states do not agree with deferral because there is a significant cash crunch issue to be able to meet its obligation. But I think, if I'm not mistaken, the Bihar Chief Minister had suggested virtually a mechanism of borrowing where the states could monetize what the center owed them by way of compensation cess. So the center determines what is the compensation cess that's payable to the states. It actually does not pay it, but the states actually go and monetize or securitize that and the securitization can happen only through the RBI route. This was something that appeared in certain media reporting that happened today, but I did not see any form of debate on the deferral of the compensation. And in the event there is deferral, how will the state meet its immediate cash requirements?
No, I just want to come in here.
Yes, sir.
Mukesh, I think we are all speculating because we still do not know the details. I talked about the second option only after the finance minister in response to a question raised, clarified that, you have this option, but the states don't have to pay any money from there. Everything will be collected from the GST compensation set. And the compensation set should be extended until the time this is paid off, both the interest and the principal. This is what she said. Now, we don't know. We are all speculating. And as far as the securitization is concerned, I think that particular idea seems to have gone in to take resort to go to the Reserve Bank of India rather than to the market to borrow the money. And that is the reason why I said, this is the way they are going to likely to monetize this part of the debt. Now, as I said, we will have to wait until the fine print comes out. But in any case, as I said, my good friend Manpreet may say, and let me also tell one thing. 279, actually 279A is an insertion to create a GST council. In the constitutional amendment bill, 279A is under that the GST council has been created. Within the GST council, there is a provision for this, but then that has provision for a dispute resolution mechanism that has not been activated. So he is basically talking. So, it is not that we are going to 279A.
Correct.
I just have to add one point to what.
If I may just interrupt here. I know all of you are looking for fine print. Unfortunately, my colleague has just reported that there will be no fine print forthcoming because the finance ministry has said no press release will be issued by them today. And the second point I want to make is, and these are comments coming into BloombergQuint from the Chief Minister of Puducherry, V. Narayanaswamy. He said that the central government said that the borrowing will be facilitated through RBI. The state said that the primary responsibility to compensate states is of the center. And therefore, they demanded that the center should borrow from the market and repay the states. But obviously, that didn't go down well with the center. And so what we now know is that Puducherry and West Bengal have both agreed for the second option. The only part we are unclear about in the second option, at least in this discussion, is the fact that whether the cess period will be extended to recover 97,000 crores or 2.35 lakh crores.
Or the items under cess may be increased. We don't know.
Or the items, whatever happens, the cess will be expanded or extended to recover 97,000 crores, which the center believes is the loss on account of GST implementation this year, or to recover 2.35 lakh crores, which might be the overall estimated loss. And of course, we're only confining our conversation to FY21. Pratik, you wanted to say something quickly?
I just want to make a quick point to what Mukesh was saying. One was this dispute settlement body or mechanism which GST Council has to create. That is only to resolve the center and state dispute, right? That is different from the GST Council voting, which will happen on the GST Council decision. So this is, for example, to say there is one state who imposes a new tax now, and center takes them to the GST Council, and then GST Council had to set up a mechanism to resolve that. The voting will happen on decision made by the GST Council. That's a different sort of bracket altogether. I think the issue is that GST Council is yet to create this mechanism.
Dispute resolution. Yeah.
All right. So I think that leaves us there. We have two gray areas right now, which we're hoping that will get clarified over the period of the next 7 days as states respond, whether the center will consider an extension or expansion of the levy, the cess levy, to recover all 97,000 crores of shortfall today, this year, or only 97,000 crores or all 2.35 lakh crores. And what is this RBI window mechanism going to be, despite the options that Dr. Rao faced in front of us? Just to wrap up this conversation, I'll come to each one of you for quick closing comments. Dr. Rao, this was probably not the way we hoped the GST conversation would proceed. There are so many other reforms, as you have pointed out, that this tax requires at this stage, which unfortunately now will be sidelined by the cracks that have appeared, in the consensus otherwise that existed between the center and the states. And like you pointed out, this Cess shortfall issue is not necessarily going to be confined to 1 year. So how do you see the next few months progressing, both from a GST architecture point of view and a state financial health point of view?
Let me very quickly say that, I don't think any serious reform in GST will happen until some sort of a stabilization of revenue comes in, for which you need to have the, as I said, technology platform. Thereafterwards, the things will happen. And once the technology platform stabilizes, I think compliance also is likely to go up. Things were happening, but then, as I said, because of the technology platform, the fake invoice industry became very, very, very important. But quite apart from that, there will be cracks. This idea of consensus thing that you talked about. See, consensus in this large group is always suboptimal. Let me tell you that. I think I would always prefer some sort of voting so that reform can be carried out. Under consensus, you cannot carry out reforms. That apart, I think, for the moment, we will have to see. The status quo ante will continue. The states will, most of them will, prefer the second option. And once the technology stabilizes, things might improve, and as the economy recovers, things might improve. Until then, keep the fingers crossed.
All right. There are many more implications to this, but I won't bring them in today. If the states do consider the second option, what is the implication for the fiscal deficit? What happens to the FRBM limits? What happens to the bond markets thereafter? But these are questions for maybe tomorrow. For today, Mr. Butani, your response to the original question I posed, what does this mean for any kind of change or reform in GST? And if you have a view on what this means for state financial health. And I might point out to you that we are continuing to get comments from other state chief ministers and finance ministers, sounding very upset about the way this has gone. So the Chhattisgarh Commercial Tax Minister T.S. Singh Dev has told us, or rather lamented to us, that the center is not even willing to pay half of the compensation cess due, and that this, is unfair. The center is challenging the letter and spirit of India's constitution.
See, leaving besides the immediate sympathy towards states which find themselves in a very precarious situation, I think that this is an opportunity for states to pursue more serious reform. If you just look at the latest Niti Aayog report, where they've actually gone into more granular details on which are the states that are doing very well. Because now successive surveys are clearly indicating that whether you look at domestic investment or foreign investment, 8 out of 10 aspects which investors are concerned about lie within the framework of the states, whether it's land or electricity or environment, so on and so forth. So I think the states have to reform. And this is, the states can opt for what has Maharashtra done today. I think it's a reform. Hope other states follow. Actually, if you look at it, there is an immediate hole in the revenues of the Maharashtra state government, which is already reeling under the COVID pressure. But perhaps it gives some degree of fillip to the real estate industry. So I think that the long-term reforms have to be pursued by the state. A center can do, by laying down a model framework, whether it's got to do with land or got to do with fire, or it's got to do with electricity reforms. But I don't see this stress lessening in any manner for the next 3 to 5 years. Whatever formula is agreed will be a short-term band-aid for a deep wound in the public finance situation in our country. And I also feel that this immediate situation signals a clear shift for renegotiating what was, in my view, the grand bargain at the time of constitutional amendment. Whether that happens or not, we still need to wait and see.
All right, Pratik, last word to you.
Yes, very quickly, just to kind of respond to Dr. Rao's sort of comment that GST will not be successful unless technology is not sorted. I have a slightly different point of view. I think GST has been very successful in the country.
It has been successful, but it could have been more successful.
Of course, and also on the technology front, there has been a vast improvement. Just a 3B return which has been filed, now you're almost getting 70 lakh returns.
You still do not have an annual return. You don't have the details of the input matching. You can't do the matching.
Sure. So, So that's one point. So the second point is, I think the states got a very good deal at the time of GST implementation by this 14% increment. I think that was not realistic. And perhaps that was in the eagerness of that moment, both parties kind of agreed to it. Economy grows at 6-7%. You can't compensate the states with 14% increment. It's just not possible. Also,
look. Economy. You were talking about the real growth with the nominal growth. You need to really make a distinction.
No, the point I'm making is that if you look at 18-19 data of GST, our collection grew by 9%. If you look at 19-20 data over 18-19, we grew only by 4%. Of course, the last month was hit by COVID a bit. So, even if you discount that. What I'm saying is that 14% annual increment, most of the states were not collecting that kind of a revenue prior to GST. And therefore, I was hoping, as Mukesh is pointing out, that this 14% renegotiation would have taken place at some point in time, even if that meant increasing the period of compensation. I think this year is very crucial for GST in India because the federal cooperativism or cooperative federalism that we call this will be tested for the first time. Really serious test. All the decisions have been happened with consensus and all of that till now. Barring one or two. This is the first time in a difficult economic year. There's a pandemic situation, and every issue they could get loggerheads. And therefore, at this point in time, if this issue is not sorted out properly, then it doesn't augur well for the future of GST in the country. I think that's something which is a real concern for me. And hopefully, the center and state would find a way to kind of work together on this. But if it doesn't happen, I don't think this is going to be good for us.
Okay, I'm going to offer a quick counter to the points raised before I close this out. You're right that 14% seems unrealistic at this point in time, Pratik, but that's what the center promised the states, to bring them to the negotiating table and to make a go of GST. If the central government is not going to stick to its word, then what can we expect, right? So that's, I think, one way of looking at it. As Mr. Butani points out, though, the other way of looking at it is now that they're backed into a corner, states will probably feel forced to consider many of the reforms that we've been expecting from the center as well, even if it means disinvestment of state PSUs. So that might also become where the conversation broadens. But we'll stick to the narrow impact right now, which is tomorrow that the money markets will be trying to figure out what this means in terms of additional borrowing and what this means in terms of additional stress on the overall deficit that India faces. And I'm sure those answers will be a little bit more evident when trade opens tomorrow or when the finance ministry offers a little bit more clarification. To all three of you, thank you very much for joining us here on BloombergQuint. Thank you for your views. And if we do get more clarifications, we will definitely share them with the three of you and with our audience. Thanks very much.
Thank you very much.
Thank you.
Thank you.